Welcome to Empire State of Wealth. I'm Joshua Luberisse, and today we're tackling a skill that separates average investors from market leaders, finding hidden gem properties before the competition even knows they exist. Whether you're operating in New York City, Miami, or a small Midwest college town, the principles I'm about to share will sharpen your radar for undervalued deals, position you as a market insider, and dramatically increase your return on every dollar deployed. Grab a notepad. By the end of this episode, you'll possess a tactical playbook to identify and secure properties that others overlook. Let's start with a mindset shift. Hidden gems are rarely invisible. They're simply obscured by data noise, mispricing, or seller circumstances. Your job is to peel away layers of misinformation and discover value where others see risk or confusion. This requires three interconnected pillars: market intelligence, unconventional lead sources, and rapid, confident execution. First, build granular market intelligence. Price, rent, and absorption averages at the city or even neighborhood level are too broad. You need block by block metrics. Map recent sales by price per square foot, cap rate, and days on market. Look for statistical outliers. Properties priced 10% below the median for their micro location or lingering unsold in a hot market. Public assessor data, MLS downloads, and services like PropStream or Reonomy allow you to export spreadsheets of transactional history. Sort by price per square foot, anything falling 2 standard deviations below the mean merits investigation. Next, layer rent data from online portals or local property management reports. If a building's listed rents trail neighborhood averages by 15% or more, yet occupancy remains high, you've uncovered loss to lease you can reclaim through staggered rent increases and modest upgrades. Second, monitor zoning changes and infrastructure plans. Cities release 5-year comprehensive development maps, rezoning proposals, and transit expansion documents months, sometimes years, before implementation. Investors who study these public notices can buy parcels slated to transition from residential to mixed use, or single family to medium density multifamily, long before appraisal values reflect the potential. I routinely parse meeting minutes of planning boards in boroughs like Queens and districts in Atlanta. The language might appear dry, but buried inside are catalysts: a new light rail stop, a medical campus expansion, a tax increment financing district. Parcels 1 mile out from a confirmed transit line often appreciate 20 to 30% by groundbreaking. Secure them early, and you've minted equity before swinging a hammer. Third, cultivate unconventional lead pipelines. Everyone watches the MLS. The true gems surface off market. Develop relationships with municipal clerks so you receive weekly lists of code violation properties, homes cited for peeling paint, broken porches, tall grass. These signals often indicate deferred maintenance and an owner low on capital or motivation. Next, pull probate filings from county court websites. Heirs frequently inherit assets they neither want nor can maintain, creating a short window for direct acquisitions at favorable prices. Divorce filings, tax delinquency lists, and pre-foreclosure notices offer similar opportunities. Approach with empathy and professionalism. You're providing liquidity and relief, not preying on hardship. Data scraping tools automate much of this. I set up alerts that email every newly filed notice of default within my target zip codes. The moment the alert hits, my assistant mails a personalized letter, and I follow up with a phone call. Speed and consistency convert leads that casual investors miss. Driving for dollars remains a timeless tactic. Allocate one Saturday morning each month to physically cruise neighborhoods early in development cycles. Look for boarded windows, overfilled mailboxes, or grass a foot high. Snap a photo, record the address, and later search the owner via your state's public records or skip tracing service. One of my highest yield deals, a 3-unit brownstone in Bed-Stuy, came from a single overgrown lot I noticed on a coffee run. I mailed the absentee owner who lived states away. 2 months later, we closed at a price 40% below rehabbed comparables. Auction environments can also produce gold, but you must master their nuances. County sheriff sales, tax lien auctions, and online platforms like auction.com list distressed properties at steep discounts. The catch: minimal inspection access, cash-only terms, and razor-thin diligence windows. Attend several auctions as an observer before bidding. Study title reports for junior liens, unpaid utility bills, or HOA assessments that could wipe out your discount. When competition is fierce, pivot to over-the-counter tax deeds, those unsold at auction that can often be purchased directly from the county for the back taxes owed. Quiet title actions to clear clouds cost time and legal fees, but the discounted basis justifies the effort. Leverage technology to filter noise faster than humans. Train a simple Python script to scrape daily Zillow and Realtor.com updates, flagging listings priced at least 15% below estimated market value based on recent comps. Combine that with ChatGPT or other LLMs to auto-generate initial outreach emails or letters tailored to each owner, saving hours every week. PropTech is your competitive cudgel. Wield it. Next, harness local networks. Bird dogs, drivers, postal carriers, or Uber drivers you pay per lead can text you photos of distressed properties they encounter. Offer a $500 finder's fee upon successful closing. Real estate attorneys and title agents often learn of estate settlements or quiet divorces before deeds change hands. Treat them to lunch monthly and emphasize confidentiality and quick closings. Contractors are another hidden vein. When a renovation stalls due to budget overruns, contractors know first. I provide my go-to crews with business cards that say, "I buy properties fast. No agents, no fees." A single referral from a frustrated homeowner can yield a six-figure equity spread. Now refine valuation instincts so you can pounce before public sentiment shifts. Memorize rental comps, renovation costs, and ARV, after repair value, benchmarks for each micro market you pursue. Walk through 1,000 properties virtually via listing photos, then confirm your estimates by previewing at least 5 homes in person each week. Within 3 months, you'll eyeball a cracked foundation or outmoded mechanicals and calculate the fix in your head. Rapid underwriting allows you to present a credible offer on the spot, outmaneuvering buyers who need a weekend to crunch numbers. Creative deal structures widen your funnel. Offer seller financing when owners want monthly income rather than a lump sum sale. Present a master lease with option to purchase if the seller is reluctant to relinquish title today. Craft a subject to agreement, taking over an existing low-interest mortgage when rising rates make bank financing expensive. Flexible solutions resonate with owners facing unique constraints and let you control properties at minimal upfront cost. Due diligence speed must match acquisition speed. Maintain a ready team, an inspector on 48-hour call, a title company that turns searches in 2 days, and a hard money lender who issues proof of funds letters within hours. I keep digital templates for LOIs, assignment contracts, and escrow instructions, so paperwork never delays an opportunity. Once you secure a hidden gem, unlock its value methodically. If it's under-rented, implement cash for keys agreements or staggered rent bumps blended with cosmetic upgrades. For vacant properties, execute targeted renovations aligned with neighborhood appetite. Quartz counters in luxury markets, durable butcher block in workforce housing. Resist over-improving. Every dollar should yield at least $1.50 in increased value or rent. Finally, track your performance metrics obsessively. Maintain a spreadsheet of marketing costs per lead source, conversion rates, average discount to market, and realized return on investment. Cut underperforming channels and double down on those delivering profitable contracts. Hidden gem hunting is a numbers game fertilized by creativity and discipline. Let's summarize. Collect hyperlocal data. Anticipate zoning and infrastructure shifts. Mine off-market lead lists. Drive for dollars. Leverage auctions and mobilize human and tech networks to surface distressed or undervalued assets. Combine that sourcing engine with lightning-fast valuation, creative deal structuring, and responsive due diligence, and you will consistently uncover properties others overlook or dismiss. Begin today. Download your county's code violation list, walk a transitional neighborhood at dawn, and introduce yourself to a probate attorney. Every unpolished stone you turn lifts you closer to the next hidden gem and propels your empire state of wealth forward.